In less than 5 minutes, I was able to save my clients about $15,000 in federal income tax, and I'll show you exactly what I did and how simple it was. Now, this started with an email from a client who wanted to book a tax planning consultation. And before we got into it, just out of curiosity, I wanted to run some quick numbers to get an idea of how much potential there was. So I went into their file, grabbed just a few key numbers. So I grabbed their age. Now they're a couple, married filing jointly. I put in both taxpayer and spouse's age. Then I went down to income. Now they're both W-2 earners, so we put in each of their W-2 wages, their combined federal withholding, and the only other income type they have is from a rental property. Now, just looking at the P&L on their rental property from last year, they take a loss on it, and their losses are disallowed because of their income level. So the rental property, just for a quick analysis, I mean, that's not going to play a factor. So we've already entered their income, and right here in the sidebar, I have a projection. Basically, if I just enter everything in, this is going to project what they're going to pay, and we see a balance due of $4,150. And this is after their withholding. So we have their withholding applied. And if I were to file their return, they would be writing a check to the Treasury for $4,150. Now I'm going to scroll all the way down to where we can elect tax strategies. And I see like HSA, for example, and I saw in their W-2s, they have employer health insurance. Is a high deductible? I don't know. That's something that I'd probably go more in depth on if I was sitting down doing a multi-hour paid analysis for them. But we're talking about whipping something up in 2 minutes real quick just to get an idea of potential. I mean, this is something you can do for a client in 2 minutes and send them an email saying, hey, I could save you thousands of dollars. Book me at this rate. My rate's $300 an hour. So it's easy if you're going to save them thousands of dollars to justify your cost. Now, traditional IRA contribution, zero. Well, their income excludes them from a deductible traditional IRA contribution. That's why it's zero. But I did notice that on their W-2s, they have a retirement account, but they're not contributing to it. So if we elect just one of the taxpayers' max 401k contribution, we can go over here to the real-time summary, toggle to their strategic projection that takes into consideration their 401k contribution. And we see that just if one taxpayer maxes out their 401k contribution, they go from having to write a check at the time of filing from $4,150 to the Treasury to getting a refund of $3,569. So it's about a $7,000, almost $8,000 difference, savings in taxes. What if both spouses max out their 401k contribution? Now they're getting a refund of $10,814. You can jump back, toggle to the baseline. Again, they started with having to write a check for $4,150, and then you can go over here and show that if they elect both strategies, that they're getting a refund of $10,814. So $10,814 plus $4,150, that's about $15,000 in savings. Okay, and there's ways to kind of adjust this, by the way. Let's say they tell you, look, we don't want to make the full $31,000 contribution because we have a lot of bills going on. We can't afford to. We need that. We can't defer that money. Okay, fine. So we'll go down here, enter a custom 401k contribution. Let's say just one of them wants to put in $10,000. You can show them again here by starting here with the baseline projection, toggle over, and now if one of them puts in $10,000, you can see that they've saved about $3,000 because their balance due that they have to write a check for at the time of filing goes from $4,150 down to $1,660. So you can play with that number here. But let's go back to that very nice full contribution. Now, let's say both taxpayers are like, yeah, we want to save as much as possible. And you want to show them the side by side. All right, well, let's go down here. Let's create a PDF report. And you can see that this is a snapshot, a summary that compares both their current and then strategic projections side by side. And we see that we go from the 4151, which they'd be writing a check for, to a refund of $10,813. That's the key number right there. That's what they're looking for. You can show them side by side. I mean, the effective tax rate drops a little bit, but that's not as significant as what we're really talking about here, because the effective tax rate, that's just taking into consideration their W-2 taxable wages drop when they do the tax deferred contribution. So anyway, we have a $15,000 savings. I mean, this is it. This is all you need to do. I mean, you could go through, you could jump back here, go through this by entering their figures, show the most dramatic elective tax strategy, toggle back and forth until you get a number that is dramatic enough to present to your client, create the PDF report. You have the PDF report here. You have the snapshot here. You can just circle this with a red pen. And this is kind of the mic drop moment for your client. And then when you actually are going through this whole strategy, this is where you're going to spend maybe hours of just looking under every rock for every single potential where you can save them money on implementing tax strategies. But we're talking about what the lowest hanging fruit is and the easiest. And that was me just literally taking a couple minutes to enter their income, going down here, seeing which tax strategies they are eligible for, electing them with this toggle, and then going back and forth, seeing this number. This actually surprised me. Creating the PDF, and I'm going to email her this report and say, good news. And that's it. Hope you found this helpful. Thanks for watching.